Hi everyone, my name is Tammy and today I will be presenting my FYP project titled Fuzzy Embedded Long Short-Term Memory with applications in stock trading. The main motivation behind this project is this. Although neural networks have stronger learning abilities and excel at information extraction, it also has very low interpretability and basically functions like a black box. On the other hand, fuzzy systems have high interpretability as it uses linguistic variables that are human understandable. However, it does not have learning ability. As such, this project aims to create an architecture that is able to leverage on the strengths of both the neural networks and fuzzy systems to achieve a model with strong learning abilities while also being interpretable. As such, the objectives of this project is as follows. Firstly, we will propose and implement the fuzzy embedded long short-term memory architecture. Next, the FELSTM will be benchmarked against other models on various common datasets. Thereafter, we will apply the model on stock prediction tasks with multi-day look-ahead. Finally, we will develop a look-forward MACD technical indicator, which will be used for subsequent trading experiments. The proposed architecture consists of 5 main layers. In the input layer, CRISP values are fed in and each neuron represents a feature of the data point, such as closing price of a stock. Next, the condition layer fuzzifies the input value using a clustering technique, and the fuzzified inputs will be concatenated and simultaneously fed into both the long short-term memory and the fuzzy system. This is where the model performs learning and knowledge extraction from the data. Finally, the output is defuzzified to obtain the final CRISP output values. To ensure that the model performs well, several benchmark experiments were conducted using the following datasets. These datasets are particularly challenging due to its small sample size and are commonly used in machine learning researches. Overall, the model managed to perform relatively well in all the experiments where it achieved a relatively low RMSE value with a relatively high R-score compared to other models such as the RNN, DENFIS, and IER-SPOE. Next, the model was used in several stock prediction experiments where it was made to predict multi-day look-ahead closing prices of the S&P 500 and the AAPL stock. Here, we can see that the FELSTM managed to achieve a very high R-score for both T+1 and T+7 experiments on the S&P 500. We can see in the diagram here that the model also managed to predict the COVID-19 sell-off back in March 2020 rather well, which could be due to its ability to remember the previous subprime crisis crash back in 2008. Next, we will discuss the trading strategy used in this project. Firstly, we need to understand the exponential moving average indicator. This indicator is the average value over the specified number of periods, and it places greater weights on more recent data points. However, since it is dependent on historical data points, it is a lagging indicator. To solve this, we introduce a look-forward EMA indicator, which is a modification of the previous EMA indicator as it includes future data values using the predicted results generated by the FELSTM model. This allows us to reduce the time lag of the indicator. In the trading experiment, we will be using the look-forward MACD indicator, which is a modification of the popular MACD indicator. It can be calculated using the formula here, where the slow look-forward EMA is subtracted from the fast look-forward EMA. The trading strategy used in this experiment is the crossover trading strategy. Here we have a signal line which is the 9-day EMA of MACD as well as the MACD line itself. The strategy is to buy the stock when the MACD rises and crosses above the signal line, as we can see in the diagram here, and to sell the stock when the opposite occurs. In this experiment, an initial capital of $1 million is used, and a 0.1% commission fee is imposed per trade to reflect real-world trading scenarios. The S&P 500 data will be used in the trading experiment. And the trading setup can be seen in the diagram here. Firstly, the pre-processed data is fed into the FELSTM, which then predicts multi-day look-ahead prices of the stock. Next, the look-forward EMA and MACD are calculated with the help of these predicted prices. The crossover strategy is then implemented where a stock is sold when there is a sell signal based on the MACD and signal line, and the stock is purchased when there is a buy signal generated. Finally, the returns of the trading experiment is calculated. As we can see in the table here, the look-forward MACD strategy managed to outperform the buy and hold and also the vanilla MACD strategy. It is also interesting to note that the vanilla MACD actually generated a lower return than the buy and hold strategy, which could be possibly due to the generally bullish market that the S&P 500 has been in over the years, combined with a high cost of commission incurred from many trades conducted by the vanilla MACD strategy. This project could also be extended by improving the hyperparameter tuning of the model using genetic algorithm, which is known to be able to handle a large search space within a reasonable amount of computation time. We can also conduct further testing of the model using other financial assets, such as cryptocurrencies, which are more volatile. And we can also use other additional technical indicators, such as the Fibonacci retracement indicator, to further improve the results. And that is the end of my presentation. Thank you for listening.